Welcome to the video version of the Wagner Daily for August 2nd, 2019. Once a week, this video replaces the written commentary portion of our report, and hopefully subscribers can see how we set up our charts, what indicators we use, what time frames we look at, as well as serve as a nice change of pace from our usual report. So let's get to the charts. The NASDAQ composite for the second day in a row closed below the 20-day moving average, which is a negative sign in the short term, especially after Thursday's session, which rallied about 1.8% above the prior day's close before reversing lower and closing about 2.5% off the highs of the day. So that was a substantial sell-off in the afternoon. So whenever there's a strong uptrend in place, when the price breaks the 20-day EMA and isn't able to recover immediately back above the average, odds favor the price action going sideways to lower over the next few weeks, and typically that will allow the 50-day EMA to catch up, or if you want to look at the weekly chart, the rising 10-week moving average. Same goes for the S&P 500, which is now really close to the 10-week moving average, less than 0.5% away. The price action may simply just undercut this 10-week MA and chop around in a tight range for a few weeks. And on to IWM, an ugly false breakout here has led to a pullback. Generally speaking, when there's a false breakout, there's a 2 to 3 day shakeout but to a major moving average, or a shakeout beneath a prior swing low, which is around 153.40. So let's see how IWM reacts off the 50 and prior swing low here. Overall, we'd like to see the price action hold above the 200-day MA though. And MDY, also a false breakout that led to a nasty shakeout here over 2 bars, which has already undercut the prior swing low and is right at the 10-week moving average. And it's just above this trend line here that we've drawn. MDY is coming into a decent amount of support at 350. So let's see how it reacts to that support level over the next few days. All right, and on to open positions. Currently in the model portfolio, we have GCOS, which we entered around 77 here. It is now up about close to 10% in 3 sessions on bigger than average volume, so looking pretty good. Has earnings on 8/7, will likely hold through earnings. ZS, we're long from 78.20 with about a 6 to 7% gain right now. We have a very tight stop in beneath the 20-day EMA here in case it doesn't hold up. GH, we are in from an average of 86, I believe. Got a really good entry here around this area. And we have a buffer of about 9% headed into earnings on 8/8. And the last open position is in Cyber, which we own over 130. Had a nice move out, about a 13% move out, and then had a nasty one-day shakeout, which so far has held. What we'd like to see it do now is remain above this 136 area for the next day or two maybe, and just eventually reclaim this 10-day moving average and punch back through 144 and move to new highs. But that may be tough to do before earnings, which are on 8/7. And I forgot to mention that we stopped out of DXCM today. Here's the strong run-up off the 50-day MA here. There's a big rally. We bought in around 145, close to the 20-day MA, around in here. We added to the position above range highs, and it looked like it could go a few times, but it stalled prior to earnings. And we sold the ad for a scratch on 7/31, and we had a stop just below 148.49 here coming into the report. And there was an ugly sell-off on the open. Then the price reversed higher, but then sold off back again below the 20-day EMA. So we're out of DXCM, but with a small 2% gain. So we're going to keep an eye on DXCM for the price action maybe to tighten up here over the next few weeks and for a re-breakout attempt down the road. In terms of new setups for Friday, tough to say given the ugly close in most broad market averages yesterday, falling some 2% or more off the afternoon highs. So it's really tough to be bullish about the market on Friday. However, sometimes when market conditions look ugly, if you focus on your setups, sometimes you can be surprised in how the market can recover from an ugly sell-off and turn around. And if you're on top of your setups and something triggers, good things can happen. I think that's when most investors are scared and they stay away from going long. What is out there in terms of potential setups? TER is a breakaway gap up to all-time new highs. As you can see here on the weekly chart, here's a breakaway gap up on the daily. The 10-day MA is approaching, so we'd like to see how it acts around the 10-day. Could provide a low-risk buy entry there. Snap is something to monitor as well for a swing trade, especially if we can get above 1750-ish. Note that this was also a big volume gap up after a touch of the 10-week MA. Stopped just shy of stopped a few percentage points shy of the 50 MA, but did touch the 10-week MA here. And if the market does struggle over the next week or two, look for recent breakouts such as NEO to pull back in over 2 to 3 sessions or more. Any kind of pullback into this 2450 area and declining volume. MTCH broke the downtrend line on a pickup in volume. We'll see if the price can hold above the 20-day EMA and then could be in play on a break of this downtrend line next week. We'll have to see how the price action reacts to the 20. Telera gapped up on a pickup in volume on earnings, cleared resistance at 850. We'd wait a few days to buy, look for maybe a day sideways and then an inside day. Etsy has been in base mode since, I believe, March here. And the weekly chart looks a little bit better. If it can clear this downtrend line, could be in play in the next week or two over 7130 or something like that. And QTRX is a pretty good looking chart here. Nice breakout above range highs. Has pulled back into the rising 10-week moving average here on the weekly. On the daily, has working on a higher low. Maybe a break of this downtrend line is a potential entry point. Keep in mind it does report earnings on 8/6. So the past 2 days have not been pretty for the market. Doesn't mean the market rally is dead. The odds do favor the market going sideways to lower the next week. But as I mentioned earlier, it doesn't mean you should take your eyes off the market because we've seen the market recover pretty quickly from nasty selling before, and wouldn't be surprised if it did it again. Well, that's a wrap for tonight's video. Thank you for joining us, and we'll see you again next week. Have a good weekend.